traders. Interesting RBA day actually. So RBA came out with 3 different comments today about this Australian dollar. Now originally the market pushed down, but we just also had previous to that some very strong Chinese numbers, and iron ore yesterday was very strong. US dollar was very weak, so the market had some latent build up here of US dollar weakness. I was definitely keen to buy the Aussie on the dip to 80, and that's exactly what I did. I bought a little bit of Aussie at 80 and got out at 80.30. Now after that, it's been a little bit more weak, and it's been a little bit more mixed in the other majors. So you've seen the euro push back a little bit. You've seen the pound do okay because it had some decent data. But you've seen dollar yen bounce off 100 in 10. So, I mean, the market just took advantage of taking out fresh stops there. If it gets back below 79.60, it gets a little bit more serious. And it could just be time for a technical pullback. That being said, I'm very keen to buy these dips in the Aussie. So I'm looking for any sort of resumption of strength. So what would that be? It would be back above 80, yeah, and holding above for a few hours. I wouldn't mind that, and then I'd do a quick little trade here, trying to get back on that rally. We can easily get to 81, 82 now that market's a bit more comfortable here, and we've got past that RBA little test. The other thing of note is that US futures above 22,000, so crazy. Bad news is good news. Good news is good news. Market's just grinding higher, and you know, this is the sort of market we're in right now. It doesn't seem to be affected by anything geopolitical. And so the headline risk from Trump and all those, I mean, while it's hurting the US dollar, it's not hurting the Dow Jones, that's for sure. I mean, there's a little bit of US dollar weakness equals you know, outperformance for the underlying US assets, like the US stocks. And you're not seeing a you know, continuation of the rally in the DAX to the same degree. So there is sort of this decoupling going on in stock markets, which is interesting. I haven't seen that really much in the last 6 years. And that could be something that develops into a bit more of a tradable theme. You're getting the Nikkei lower and you're getting the DAX lower, while the Euro's stronger, dollar's weaker, yen's stronger. Yeah, so it's just like a little thing going on there that could start to become a main thing. And that would make interesting trading the indices, because then you could be like, well, you know, Aussie's strong, so we're selling, you know, ASX or whatever it is. It becomes, it'd be just something new, that correlations, and new correlations are quite fun to trade, because it gives you a little bit of reason to get into some trades when it becomes clear that certain things are lagging. You know, you might see a big move in oil and the CAD hasn't moved yet, so you might be able to get a bit more confidence to enter a trade there. But if it becomes a thing where the euro and the DAX are really negatively correlated, so you higher euro, lower DAX, that'll be good. You know, I like that sort of thing if it happens. It's a bit early to say that's happening right now. The pound and the euro are definitely getting back together in terms of their movement. So you see the euro pound in very tight ranges, and the pound and the euro moving pretty lockstep. That's good. That's good as well. So it makes it everything against the US dollar. That sort of brings it US dollar strong or weak as your view that you need to get down first in the day, and then you worry about everything else second. Tim, yeah, everything's good, mate. Just had dinner tonight, so a little bit late streaming compared to normal, and so it's no, not a bad situation here. If you've been in this market long, the euro, you're really quite happy here. Unfortunately, I bailed out of my long euro trades, all of them, and I was like, well, I'm gonna buy the pullback, and the market hasn't given you that opportunity. In terms of buying dollar yen at 110, that could have been, it would have worked on the first attempt. Second attempt is much more dangerous, guys, if it does go down again, so be wary of that. But yeah, it held the first attempt, so that was a bit of North Korea tensions building and statements coming through here, but nothing crazy, and the market really didn't fall in stocks, so it was hard for it to push below. It was a bit of a mild attempt, and you know, it'd be better if the stocks were down 200 and, you know, pressing, and then it broke, and then you got a big collapse. It's yeah, this is nothing to get enthusiastic about. In terms of the euro, and you know, is it going to just go straight to 120 or not? Well, I'm just a bit surprised that we got straight to 118 so easily. So You know, it's definitely possible. I'm open to that idea. In terms of where I'd buy now, my pullback level is sort of like 117.60. If we get back down there, I might have a little sniff around buying. So I was looking at one, you know, sort of 16, low 116s. Now I've risen it up a little. Depending on why it's falling. If it's US dollar strength from the PMI tonight, I might just let it go. Because you don't want an excuse for the US dollar to get strong here. That could really take out some trailing stops, because the market, once it starts trending for a few weeks, you get trailing stops building up, usually below previous lows in the rally. So that's where I'm not. If it's just a pushback without data, then yeah, I'll be happy to sell dollar yen and buy euro dips. If it's a good piece of data that the market might be able to like, oh, things are actually not too bad, then you get the door open for double day, 2 days of US dollar buying into NFP, and then it's a bit of a toying cost with how NFP will come out. So you don't really want to be in that position, buying the euro at say 117, and you find yourself at 116.60 into the NFP. Danger. Could get yourself into a little bit of trouble just being too stubborn, right? Because it's very hard to take losses when you're with the trend or the big new trade. So what was the RBA concerned about? Some of the headlines there: rising Aussie dollar would slow economy. Rising or higher Aussie dollar is restraining the price pressures, which is, basically they're concerned about its effect on lowering inflation because it makes imports cheaper. And one more little thing that was said. And the rise in Aussie dollar is weighing on the outlook for the growth and employment. So you had, triple little statements. Yeah, and that's pretty aggressive. But there definitely wasn't an immediate reaction to it. I mean, the immediate reaction was down a little bit, but then the market came straight back up. I actually thought we might be on the way to 81, but since the rest of the US dollar selling was a little bit on pause today, the rally stalled a little. And we've got to be a little careful here, about the potential of getting caught up in a US dollar pushback. It's not so much you have to worry about Aussie weakness too much, because the market's showing you it's quite keen to buy on dips and quite keen to ignore the RBA, and with that backdrop of iron ore recent rally and Chinese data, which is today we had the private PM Caxton number come out strong as well, 51.4 versus 51, so 50.4 forecast. It's that opens the door for just a more aggressive rally and just more strength underpinning that move, but it is overbought, and if the US dollar pushes back, you will get the trailing stops hit underneath 79, and you can get into trouble here, right? Just being a little bit too bullish too quickly, or too late. Too late to the game. Market's not exactly there to just hand out free money all the time, right? You got to be wary of where the dangers are, and the dangers are of just getting too aggressive in your view. And so it's, if you buy here, market goes here, you buy a little bit more, market goes here. The question is not to buy more, but to be a little bit more concerned. And if it gets down to here, I mean, you're now at the point where you want to have a 2 or 3%, 4%, 5%, 10% loss if you're trading a bit aggressive, maybe 20% loss if you're just wheeling dealing, and it's a serious situation you got yourself into. And how'd you get into it? Just by being too bullish on the Aussie. And so avoiding that scenario where you can get into trouble is probably where, if you do buy, you put a stop in. And it's not that you don't want to be long the Aussie, it's just that you want to see what happens next. A little bit of a pause before you buy again. Let it buying come back into the market before you buy. It takes patience and experience to develop that sort of awareness or appreciation that the market at any point can reverse 500 points from where it is right now without the necessary major change in anything. So it's if we do get a big pullback, that'll be instruction. That'll be a good education sort of how big a pullback you can get. after the market's gone as far as gone. I mean, how far has the euro gone? All right, what is a normal pullback? Okay, it depends on where you put your Fibonacci's, I suppose. But say you just draw the pullback from the, let's say the euro hops there. So this support is where it could get to. This support is, you know, where a bit more bigger buying would come in, right? If you're just talking straight up Fibonacci supports. Now that's underneath 115. Imagine man stops underneath 115 now in the longs, right? That doesn't change the trend. That's just a normal pullback. Yeah, and that can happen over a couple of days. Maybe ECB comes out, strong NFP, strong PMI, a couple of hawkish Fed members, ECB saying too early to taper yet, maybe September's not the meeting, and blah blah blah, and then stabilization and resumption as, you know, I don't know, Trump does something or whatever. Market starts to rebuy again as, you know, while it's delayed, it's not stopping, and yields continue to rise in Europe. Something, you know, just. But a pullback like that is definitely achievable and not crazy talk, yeah. And if you're not open to that, then you haven't traded long enough. And if it does happen and it wipes you out, you're like, and then it goes back up, you go crazy, yeah. You go crazy, you're like, this market's too hard. All right, so this is why if you're trading high, you definitely need stops. You definitely need stops. If you get a bit of a pullback to 116, you buy, yeah, you can start a little war. Alright, but you'd be very concerned if it holds underneath 115. How did my oil trade go? It was looking really good when I went to bed. Jesus. Looking great when I went to bed. Let's have a look at it. So, when I went to bed yesterday, market was quite low. I'm actually very lucky it hasn't stopped me out. So I was selling this candle. So before this happened, the market was looking a bit different. It was here. It was low 49s, and I was like, yeah, okay, good. I might have picked the top. I might have picked the top in that oil. Then the US session began late. And just surged past 50. Took out a few stops, and my stop is at 50.50. Didn't take it, luckily. Now we're back at 50. What happens here is pretty important. I might just close if it looks like it's gone back up again. If it breaks back down, then that's okay. That's okay. But yeah, this was going to plan, not going to plan. Now, why did I not close here, right? Well, why did I not close here or here? I was sleeping. Yeah, and I have a little bit of faith in terms of when my top, the downside, I haven't really put one in. Probably 40, 48, low 48s, and that's really achievable. That's not crazy talk. Yeah. That's just a couple of days of selling. If the market feels that the top's in, it will really sell off, guys. That's what you have to know about oil. If the short term top's in, it's a really volatile product, yeah, and so it survived, but barely is the answer on that. And the dollar CAD, I believe, was stopped at entry, and since has bounced up again as well. Dollar CAD's actually really showing. Let it update. Like, so we made a bit of money on a few dollar CAD long trades on that day, and then the ones that we had left stopped at entry yesterday. This is really stabilization levels, and this is, if you're looking for warning signs, you know, something to add to your little bit of concern list if you're long Aussie, it's the dollar CAD, right? I mean, everything sort of moves at once, so you might get the CAD start to move and then up, or the Aussie start to move down, and then the pound follow, and then the euro follow, and just everything takes on a life itself. It could be dollar yen started on a, you know, a slightly stronger PMI number, but it's sort of the way the markets are interconnected is that at these sort of oversold US dollar levels, the correction could be a bit of an avalanche, and if there isn't a correction by Thursday, the avalanche can be sparked by profit taking into the NFP risk event. So yeah, there's multiple ways US dollar has a good couple of days this week, or at least one good day, and really you got to be worried about that. You can't just rely on US dollar to be weak every time, although it has been weak every time. Like this perfect storm against the US dollar going on in the background, and you know, that's why we've got so far so quick. But yeah, no, it was okay. Yeah, this is getting a little bit more weaker, isn't it, the Aussie? You're a bit cheeky, a little bit cheeky. I'm gonna have to keep an eye on you. I was buying again at 80. I might close. I might close. I like it. It can go both ways, yeah. So the Westpac review. Resist the temptation to jawbone Aussie. I think it jawboned aggressively. Like, I was surprised by the number of times they talked about Aussie dollar in there. So this is a review by Bill Evans, who's a bit of a well-known Aussie RBA talker. Okay, so the comments they're looking for with jawboning is depreciation is necessary, which was the language used when the Aussie was falling between 80 and 75. At the very least, the expectation of terminology by Deputy Governor, a low Aussie would be helpful. So we didn't get the phrases maybe that the market, the bears were wanting. In terms of what happened in China, like I said, that Caxton PMI was very strong. This is the private number, so you had the government numbers that were decent, but this one was actually very strong. I know was higher again. I mean, if that continues to happen, it's very hard for the Aussie to be under pressure. Now this PMI coming out tonight in the US is probably the most important pre-NFP number this week, just to see how sentiments in businesses are in the US. I mean, it's a big thing for Trump anyway, manufacturing. In terms of the forecast at 56. Slightly lower than last, but there's been a string of strong ones. Actually, a couple months ago it wasn't so strong. So March was 57, April 57, May 54, June 54, July 57. So there is some variance in these numbers. You might really, you know, if you can get a two point drop, right? That's a big drop. Or if you get a crazy number like a 58, you know that potentially you'll see a sharper move than you would expect from the US dollar given the positioning. Yeah, you don't need much. In terms of the reason for this euro rally, the eurozone inflation numbers were really strong, and well, it's picking up anyway, so the market doesn't need an excuse, right? But basically it pushes along the timeline for where you're going to get potential ECB moves. So that's really where the market is looking at inflation around the world. You start to see inflation pick up anywhere, that country is probably moved further up the list. Yeah, that's a little report that I was having a glimpse at earlier. What will it take for the US dollar to turn around? Fiscal policy. So, but the dominant market attitude to new US fiscal policy initiatives is paraphrased like once bitten, twice shy. I believe when I see it, show me the money. So yeah, that's Trump's sort of plans. We really need to see some headway there. The Fed's balance sheet initiatives. But you would need a 10-year spread link to the euro to kick in again. And a trade war. Which would help the US dollar against risk currencies, but not against the G10 majors. Strong US data. Not if it does not bring forward the expectations of the next rate hike. To be before December. Okay. I think still December increasing should help it. Technical and positioning. Should the DXY move below the 91.90, which is the low of May, last year, sorry. Let's have a look at the DXY. We looked at this yesterday, yeah. That low, if it breaks that, then you'll have the market looking downwards. So then they're going to be sort of looking at each of them. Yeah, maybe the US which one was a bit more interesting? Balance sheet initiatives to me seem to be a way which people A, don't understand, and B, including myself, haven't investigated enough, and might be of a size and scope, or just a reason that the market might be looking for, given an excuse to get some US dollar strength in. So if the balance sheet reductions start to lead to yields rising, remember yields are really important, then as long as that doesn't affect the chances of future rate hikes because it's seen as tightening, then it will start to affect the US dollar positive because it should be isolated to US bonds. Yeah? Correlation of the 10-year spread with the Euro USD to date is an extraordinary 95%. Yeah, that's pretty strong. Same with dollar yen. And China, I mean, yeah, if there is any trade spat between US and China, and regarding North Korea in particular, then the yen will strengthen and safe haven, but the euro will be seen as a distant sort of bastion of safety and alternate reserve currency. That's where, I mean, Trump has an effect of maybe making the euro rise as a stronger power. I think that's a potentially huge way that the euro goes a lot higher as well. If it becomes seen as, you know, a stronger alternative, or just a stable alternative. Alright guys, yeah, so interesting market, a little bit sneaky in this positioning today, and then the lackluster moves and the little bit of US dollar pushback is noticeable. So you just keep an eye on it, right? You keep an eye on it. Be keen to continue buying with the trends, but perhaps get a little bit more wary. And if things don't turn, you know, quickly when you get into trades, or if next rally fails, next rally fails, next rally fails, then just be a little bit more hesitant that the market's entering a profit-taking phase. And it's these sort of markets I get very cautious in, actually. And then you know, I just hope for a bigger pullback anyway, so that we do get better positioning, better potential, better risk reward. Yeah. I'll be back tomorrow, same time. Sorry, at 7 o'clock Australian Eastern Time, 19 GMT. Sorry, 19 UTC. Sorry, not 19. Jeez, I have to ask bloody GT time. Get my daylight savings right. Jesus, guys. Jesus, guys. You think I work in this market all the time, huh? I do believe it will be... God, I've just got to cheat. Just cheating, guys. Yeah, it seemed early, right? 9 GMT. Like when I'm streaming at 7, it's like the market's been open a couple hours. I think the time in London, though, is different to GMT at the moment. Andrew would be a little bit better for that. Oh yeah, so GMT is +1. So I was thinking London time to say to you, English traders. So yeah, 10 o'clock, guys, your time. Alright, best of luck with your trades. If you have any questions, let me know. Otherwise, we'll just do the same thing tomorrow. If you want me to look at particular pairs, just send me a little PM in chat. Yeah, I should learn the daylight savings times for the UK. I'm actually going there not too far in the future, so for the first time. That'll
good morning, folks. On
be a way which I learned the time a little bit better to the Australia. I know what time it is in most Asian countries, that's for sure. Alright guys, best of luck.